Good morning, ladies and gentlemen. Welcome to the channel. Welcome to today's episode of Adventures in Family Business. And today's video is going to attempt to clarify some of the issues that I raised in yesterday's video, which was about cash flow and the use of credit cards. Now, before I get into that, I want just to give you a similar disclaimer to yesterday. I am not a financial consultant. I am not a financial advisor. I do not give financial advice. I'm not licensed to give financial advice. What I can do is just share my experience of when I've met other people that have had financial difficulties when running a family business and talk about the impact it's had upon their families. Also, before starting, I really want to say that tomorrow I'm going to be sharing a pre-recorded video. It's with our friends at Danger Burger, and it's going to be about just what it's like to work with your spouse all day and then go home and spend the night with him or her. So that's pre-recorded because tomorrow I've got some quite important business in Istanbul to transact, and I won't have time to make you a live video. So without any more to do, let's roll the titles, and then I will get into trying clarifying yesterday's video. Well, welcome back. So let's start at the beginning because I've had some questions. And the first question that came in was, when I'm talking about credit cards to meet cash flow, am I talking about personal credit cards or business credit cards? Well, let's just go back for a second and clarify what a cash flow problem is. Cash flow problem occurs when you have insufficient cash available to meet your operating costs. These are typically wages for your employees, your own salary, and payment of your own personal mortgage, payment of your suppliers, etc. And it comes about in successful businesses when your order books are full, but your customers are not paying you on time. And lo and behold, I got a message from the person that actually prompted this video, or yesterday's video in the first case, yesterday, and they confirmed to me that in fact the person that's causing them the most problem, customer giving them the most problem, is their, in inverted commas, best customer. So this quite frequently happens. You're kind of working for a large organization, meeting their orders, you know they're good for the money, but they keep you waiting between 4 and 6 months on any invoice. And the result can be that you go to your credit cards because that's a pre-arranged credit facility that you've already negotiated with your bank. So, types of credit card. There are business credit cards and there are personal credit cards, and they are slightly different. So, if you've got a business credit card, there is far more chance that you've been in business a little bit longer, you've set your business up properly, you've gone to an accountant and sought advice, you've registered your business with the relevant authorities in your country, you've set aside a schedule by which you will be paid a salary, but the rest of the money will be invested in the business. And the business credit card has arisen because you've set up a business bank account and your bank believes in your business and knows that from time to time you'll need to pay people by credit cards, and you'll need to account for that and not have your personal money mixed up in the business so you don't personally become the business. And that is a much, much simpler and more prudent way of running a business, and it's the way that I would advise everybody to do it. However, many people setting up in business for the first time don't do that. They just set up their business in the same way as they would go out to the furniture store and buy a sofa. In other words, they say, oh, this is a good idea. I like the color. I like the smell. My life would be better if I had this sofa in my house. And they reach for their credit card and they purchase it, and then they make payments on the credit card over a period of time until the sofa is purchased. In the meantime, of course, it's wearing out, but that's another story. So if you're running your business off of your personal credit cards, what I'm going to say is doubly, if not trebly true. And that is that if you run up a debt on your personal credit cards in order to support your business, then in all probability you're going to run into substantial difficulties with your spouse, because you may have a joint personal account with her or him, in which case you're taking money directly out of that account and limiting how he or her can spend their own leisure money. Or alternatively, if it's simply your card, in all probability you're going to be having to get loans from your spouse, and they're going to then want an exchange to know what you're doing in your business, which they should already know in the first case if you've set it up properly and discussed it with them. And if they keep having to subsidize your business because otherwise you can't pay the mortgage, or you can't meet other commitments such as school fees or payments on your car or payments on their car, then they are really going to resent the business, and they're going to think that you are incompetent. And it's no good blaming circumstances, because deep down they're going to think, well, you should have thought of this in the first instance before you set everything up. Now, one of the things I mentioned in my video yesterday is that if you have a really substantial customer, then it's probable that that customer is also the person that's going to be giving you the most cash flow problems. So large corporations such as banks and multinational companies know that you kind of rely upon them in order to keep your business floating, and that they are a good source of income for you. But by the same token, they don't tend to pay on time, which means that you, the small family business, are in effect acting as their banker, because you are extending to them a loan over possibly 4 to 6 months on the goods that you are supplying to them. And this is a very, very common problem. And there are a couple of ways around it. None of them are perfect. The first way is, if you've only got one such customer, then it's quite a good idea to calculate just how long it does take for them to pay, because they are likely to be paying on a regular sort of schedule. It's very unlikely that they'll pay you on time in month 1 and then go back to paying you in 4 months in month 2. And then in month 3 it'll be 3 months. It's much more likely that they're going to be paying you every 3 months or every 4 months, and there's going to be an average in there. So if you've got some statistics about that, then you can take them to your bank and obtain a proper facility that enables you to meet these kind of costs. And really you should find out how much these costs are making to you and kind of negotiate, not on the basis of the frequency of their payments, because they're people that are responsible for the payments in these companies don't really care about you, but you should kind of add a premium to your product so that it covers the interest rate. You shouldn't do that though with credit card credit, because the interest rate will be too high. So you're not attempting to exploit these people, even if they're attempting to exploit you, but you shouldn't be out of pocket by such a deal either. Now, if you've got lots of these kind of customers, you can more or less do the same thing. You just need to negotiate a different kind of deal with the bank. But hopefully, you can also analyze the other customers you have, and if you find that you're making sufficient profit or even more profit from the remainder of your customers, then you should think about dropping the ones that are giving you difficulties. You should not extend long credit to small customers, because that's just a really bad thing. It means that you are subsidizing somebody in a similar position to yourself, and at some stage one of you is going to go under. So I'm not going to say any more about this today. I hope I've clarified yesterday's video. I hope I've explained why having a cash flow problems impacts your family life as well as your business life. And I'll be back with another live video on Friday and a recorded video from Danger Burger tomorrow. And so until I speak to you again, good luck and goodbye.
If you enjoyed this video, please take a moment to share your thoughts with other family business owners in the comments section below. You can also respond to thoughts posted by other viewers. Remember to like and share the video and subscribe to this channel. To be sure to receive notifications, you must also click the bell icon at the top right-hand corner of the YouTube page.